welcome to another episode with Rosie, your realtor. Today we have the world famous CPA, Danielle Brinkman. Hi, Danielle.
Hi.
How are you?
I'm good. How are you?
Good, good. You're probably wondering why I said world famous, right?
Of course.
Because it seems like in almost so many aspects of our lives, when we have anything related to money or questions, people are always saying, ask your CPA, but don't quote me, ask your CPA. So I figured you CPAs are world famous.
I don't know if that's good or bad.
I don't know. I just know that everybody has to have a CPA, right?
Yes.
So Danielle, tell me a little bit about yourself.
Thank you for having me today. So I'm a tax partner with Farber House Hurley LLP in Oxnard. I was on my own for about 16 years, and I merged with the firm back in 2016. Our office is in the large tower in Oxnard on the 14th floor. So our firm is actually a full service accounting firm. So we do everything from tax planning, projections, preparation, and then we also do financial statements from private companies all the way up to public companies. So I personally focus on the tax side. I do individuals, businesses, entrepreneurs, kind of the gamut. I also do a lot of trust and estate work.
Wow, sounds like you stay pretty busy.
Yes, definitely, especially right now.
I know. So because of that, extra thank you during this, very busy time for you.
Yes, of course.
Yeah. So give me an example of, which I know as a CPA, you play a huge role in real estate, but something you'd like to share today.
So I think there's a very wide variety of types of real estate investments. You have from the person who's just deciding, starting a family, deciding to buy their first personal residence, all the way up to someone who's buying their, fifth apartment building. So I really try and encourage, especially current clients, but people who aren't clients, if they're thinking about buying real estate, the best thing to do is talk to a CPA ahead of time and find out what it's going to do for you. With the 2018 tax law changes, the standard deduction is now, I think, $28,400 for 2020. It's pretty big. So previously, everyone would say, buy a house, it'll help you save on taxes. The standard deduction was pretty low. So usually when you added your property taxes together and your mortgage interest, and then, you had a few donations, maybe some medical, your itemized deductions were always higher. Now with the standard deduction so high, it typically is higher, but it's not, it might be $2,000 or $3,000 higher, not $15,000 higher. So I always recommend people just get advice, talk to their CPA, just so they know kind of what they're getting into. And then also with rental real estate, a lot of people have this conception that, if I buy a rental real estate, I'm going to get this big tax deduction every year, and I'm going to take it right off of my taxes, and I'm going to get a refund. And if you are a good wage earner here in California, which most people have to be in order to live in California,
yeah,
you don't always get to deduct your rental loss. Based on certain circumstances, it might carry over to a future year when either your earnings go down, or if you turn the real estate around and you have a profit. Once you have a profit, first you'd be able to write off those losses against any profit before you pay taxes on that income. Or also in the year you sell it, you'd be able to take any of those losses that have accumulated over the years against that gain. It's not directly against it, but you would get to take those losses at that time. So I think that's kind of a big misconception for people buying rental real estate.
Yeah, they think it's a huge investment, right?
Yeah, and I mean, I always tell people to focus on, what they think the property is going to do. If they think it's going to appreciate, it's not a bad investment. And the minute it turns around and you start making profits, typically then you can start taking those losses against that, against those profits. So you're not going to pay taxes on the profit until you kind of net even. So it usually is definitely worth it, especially if it's a property that's going to appreciate.
Which in California, they normally do, right?
Typically, yes.
Especially, long term. I would have loved to buy a house 50 years ago and paid what, 20, 30,000, right?
I know.
And even then they'd say, oh my gosh, prices are so high. But
yeah,
we live in, what's that?
Yeah. I was just going to say, with interest rates being so low, I mean, it's really
Yes,
a good thing to buy, whether it's for your personal use or for your real estate purpose or, rental purposes. Because even if you do, even if the standard deduction is a little bit higher, there's so many other things to focus on, the appreciation, paying principal every month and paying down that loan to where you're going to have an asset at the end of it.
right.
There's many, many benefits to homeownership besides the tax impact.
Absolutely. Absolutely. Interest rates are way record low. And I know sometimes people say, but the market's kind of high. Yeah, but when you figure it out on paper, and sometimes, I show an amortization chart of my clients, it's look at the difference. It's better to pay high with that low interest rate. Just do it if you can, versus trying to get the low pay, the lower purchase price, but the higher interest rate.
Yeah, it's very true. I mean, with the interest rates right now, a lot of people can afford a much bigger or higher priced house than they could have. When I bought my first house, my interest rate was 9%.
Whoa.
So
High. For us, that's
time
high.
ago. Yeah, it was a long time ago. Long time ago.
Yes. Well, and even at our peak, I think we were at like 17, 18 record high.
Yeah, I mean, yeah,
That's,
I remember. We thought we were doing good at 9% back when we bought our first house. And that buying that first house enabled me to buy another one, etc. So it's all about the appreciation.
absolutely. Absolutely. And I'm glad you say that, because sometimes we have people that they're first time home buyer and they're looking for their dream house. And the reality is most people don't start in their dream house. It doesn't have this, it doesn't have that. Yeah, but does it meet your current needs? Get in while you can, build some equity, pay a little extra, and then, turn around in a few years to upgrade. Because the reality is if you don't have a down payment now, you're probably not going to save a huge down payment in a couple years. But if you purchase your home and start building that equity, you'll have something to roll over. So
yeah, it's very true. I think it's hard for people to save, and they get a certain amount for their down payment, and then it's harder to, they might add a little bit to it, but they're never going to get maybe from 75,000 to 150,000 overnight. And all that time they could have appreciated on another property.
absolutely. Absolutely. I couldn't agree more. Well, awesome. Any other quick tidbits you might want to share, or just get your taxes done?
Yeah, get your taxes done. July 15th, the deadline.
Yes, yes.
Yeah,
So,
and there's a lot of different caveats to real estate when it comes to taxes. Like I said, there's owning your personal residence, there's owning an apartment building, there's owning, I have some clients who have multiple residential real estate properties. So there's a lot of different tax aspects. So it really is helpful, even if you do like a consultation, just to find out all the different things that go. Yeah, I would recommend that.
absolutely, absolutely. What the goal is. What is your goal in buying? And then working with your group of professionals will help guide you.
And I see a lot of my clients who, I started working with them, they were just starting out, and, they bought their first property, and now that's a rental property. And then they bought another property. That's now a rental property. So they're in their third or fourth home, bigger, better each time. And now they have those rental properties sitting there as their assets. So that's going to help them in retirement. So.
Absolutely. So Danielle, if somebody wanted to contact you or your firm directly, how could they do that?
The best way is either with my email address, danielle.brinkman@fhhcpas.com, or they can give me a call at 805-504-8410.
Awesome. Yeah, and we had that right there on the screen. Well, awesome. Well, thank you so much for joining us today. Hopefully people find this helpful, and obviously, again, to always check with their professional, especially a CPA, when wanting to buy or sell, or, do I sell to buy my new home, or do I keep it? I mean, there's just, like you said, so many factors. If they're selling within the 3 years, is it better to just keep it?
Absolutely, yeah.
Absolutely. Awesome. Well, thank you again, Danielle. Yes, thank you. All right, and hopefully, you're almost there, right, to the 15.
Almost there. Yes.
Very fun.